Imagine this. You worked your whole life, 30 years of mortgage payments, and finally, you made that last payment. The house is yours, free and clear. No more checks to the bank, no more interest, just peace. But then one morning, you open your mailbox. And there is a letter from the county. It says your home has a tax lien on it, and if you do not pay within 90 days, your house, the house you own outright, will be sold at a public auction. This is not a scare story. This happened to a 76-year-old Marine Corps veteran in Washington, D.C. He lost his home, a home worth $197,000, over a $134 tax bill. And if you have paid off your home, you could be next. I am Jocelyn. I am a senior policy analyst specializing in retirement finance, Social Security rules, and the government regulations that affect seniors every single day. And today, I am going to walk you through one of the most dangerous blind spots in retirement. It affects millions of seniors who have paid off their homes. Most of them have no idea this risk even exists. Here is what I am going to cover in this video. I am going to explain exactly what happens to your property taxes and your homeowner's insurance the moment your mortgage is paid off. I am going to show you how criminals are specifically targeting paid-off homes for something called deed fraud. I am going to reveal the hidden trap inside reverse mortgages. And I am going to explain how selling your paid-off home could accidentally destroy your SSI or Medicaid benefits overnight. But please stay until the very end, because at the 8-minute mark, I am going to give you a 3-step action plan that could save your home. And there is one mistake that almost everyone makes that I will explain in detail. Most people do not even know it is a mistake until it is too late. Let me tell you about Robert. Robert is 67 years old. He retired 2 years ago from the electric company, good pension, Social Security, and the proudest day of his life was the day he made his very last mortgage payment. He framed the payoff letter and hung it in his hallway. For the first few months, everything felt wonderful. That extra $800 a month that used to go to the bank, Robert used it for groceries, a new set of tires, and a little weekend trip with his wife, Carol. But here is what Robert did not realize. For 30 years, his mortgage company had been quietly paying 2 very important bills out of his escrow account, his property taxes and his homeowner's insurance. Every month, a portion of his mortgage payment went into that escrow account, and the lender took care of the rest. Robert never had to think about it. He never even saw the bills. The moment that mortgage was paid off, the escrow account closed. And nobody told Robert that he was now personally responsible for those bills. 14 months went by. Robert never received a property tax bill, or if he did, it got buried in his junk mail. His homeowner's insurance quietly lapsed because the automatic payment through escrow had stopped. Then one January morning, a pipe burst in Robert's basement. Water everywhere. He called his insurance company, and they told him, "Sir, your policy was canceled 9 months ago." Robert had no coverage. The repairs cost him $22,000 out of pocket. But that was not the worst part. 2 months later, he received a notice from the county. He owed 3 years of back property taxes, plus interest, plus penalties. And a private collection company had already purchased the lien on his home. Robert, a man who owned his home free and clear, was now facing foreclosure. Robert's story is not rare, and the rules that cause this are real. So let me break them down for you right now. Here is what the Consumer Financial Protection Bureau, that is the official government agency at consumerfinance.gov, says about homeowners insurance and escrow. They state, and I quote, "Many homeowners pay for their homeowners insurance through an escrow account as part of their monthly mortgage payment. You make the payments to the lender, and the lender holds the part of the payment that is for insurance in an escrow account. Then, when the bill for the insurance is due, the lender pays it from the escrow account. So when that mortgage is gone, that entire system disappears. No more escrow, no more automatic payments, no more lender watching your back. You are completely on your own." And here is what AARP confirmed. They said, and I quote, "Older adults are less likely to pay property taxes through monthly escrow payments with their mortgage." The American Bar Association has also stated directly that seniors without mortgages face special challenges because they must independently manage and pay their property tax obligations. Now, what happens if you fall behind? The county places a tax lien on your property. In many states, that lien gets sold to a private investor. Those investors can charge you interest rates as high as 18 to 21%. And if you do not pay, they can foreclose on your home. According to AARP Illinois, More than 125 senior-owned homes have been lost to tax foreclosure in Cook County alone since 2019. And here is the insurance side of this danger. Once your mortgage is paid off, there is no lender to buy what is called force-placed insurance on your behalf. The CFPB explains that force-placed insurance is something a lender can purchase if your coverage lapses. But when there is no lender, there is no safety net at all. If a fire, a storm, or a flood hits your home and you have no insurance, you bear 100% of the loss yourself. And if you try to buy insurance again after a lapse, industry data shows your premiums can increase 30 to 50% if a company will even cover you. Now, I need to tell you about something that the FBI is actively warning the public about right now. It is called deed fraud, or home title theft. And paid-off homes are the #1 target. Here is how it works. Criminals go through public records. They look specifically for homes that have no mortgage and no lien. Then they forge documents, a fake deed, to transfer ownership of your property to themselves. Once they have that fake deed recorded, they can sell your home. They can take out a mortgage against it. They can even rent it out to strangers. The FBI's Boston division issued a direct warning in April 2025. They said, and I quote, "Scammers comb through public records to find vacant parcels of land and properties that don't have a mortgage or other lien and then impersonate the landowner." And it gets worse. The FBI also warned that family members, your own relatives, sometimes target elderly homeowners, convincing them to sign quitclaim deeds or transfer the property under false pretenses. From 2019 to 2023, the FBI's Internet Crime Complaint Center recorded 58,141 victims who reported a combined $1.3 billion in losses from real estate fraud. And because there is no lender monitoring a paid-off home, these fraudulent transfers can go undetected for months, sometimes years. By the time you find out, you are in court fighting to prove you own your own home. Part 3. The Reverse Mortgage Trap, 645-730. Now, many of you with paid-off homes have seen those television commercials about reverse mortgages, and you might be thinking, maybe I should tap into my equity. Here is what the Consumer Financial Protection Bureau says you must understand. A reverse mortgage, specifically a home equity conversion mortgage, or HECM, lets homeowners aged 62 and older borrow against their home equity without making monthly mortgage payments. That sounds wonderful. But the CFPB clearly states you are required to pay your property charges, such as property taxes and homeowners insurance, on time. Your home must be kept in good repair. If you fall behind on those taxes or that insurance, you go into default. And default on a reverse mortgage leads to foreclosure, the very thing you were trying to avoid. The CFPB even published a report warning that using a reverse mortgage to delay Social Security benefits can be, and I quote, an expensive way to maximize Social Security benefits. Part 4. The SSI and Medicaid danger, 730-8. And one final danger that almost nobody talks about. If you receive Supplemental Security Income, SSI, or Medicaid, your paid-off home is actually protected. The Social Security Administration clearly states on SSA.gov that the home you live in and the land it is on does not count toward the $2,000 resource limit for SSI. But here's where people get into serious trouble. If you sell that paid-off home, the cash from the sale does count as a resource. And if that cash pushes you over the $2,000 limit, even for 1 month, you can lose your SSI benefits immediately. And in most states, losing SSI means losing Medicaid too. Even worse, if you give your home away or sell it for less than it is worth, say, to a family member at a discount, the Social Security Administration can make you ineligible for SSI for up to 36 months. All right, so now you understand the dangers. Let me give you your 3-step protection plan. Please write these down, or better yet, pause this video and get a pen. I will wait. Step 1. Take over your escrow responsibilities immediately. The day your mortgage is paid off, you must do 2 things that same week. First, call your county tax assessor's office and confirm your property tax amount, your payment schedule, and the address where payments should be mailed. Set up a calendar reminder, or even better, set up automatic payments if your county allows it. Second, call your homeowner's insurance company directly. Confirm that your policy is still active. Make sure future bills come to you and not to your old lender. Set up autopay if you can. And while you are speaking with the tax assessor, ask about your state's homestead exemption for seniors. AARP says this is the easiest way to lower your property taxes, and nearly every state has one for homeowners 65 and older. But you have to apply. It is not automatic. The AARP Foundation even has a free program called Property Tax Aid that will help you find the right program in your state. You can find it at ptaconsumers.aarpfoundation.org. Also, know your tax rights. If you are 65 or older and file using IRS Form 1040 SR, you may be eligible for the new enhanced senior deduction. That is an additional $6,000 deduction on top of your standard deduction, effective for tax years 2025 through 2028. And the SALT deduction cap has been raised to $40,000, which means you can deduct more of your state and local property taxes than before. And remember, if you lose your insurance and cannot find a new policy, ask your state insurance department about the FAIR plan. The Consumer Financial Protection Bureau confirms that most states offer these plans, which provide basic coverage even if private companies will not insure your home. Step 2. Protect your deed and monitor your title. Go to your county recorder's office or their website and ask if they offer a free title alert service. This service sends you a notification anytime someone files a document against your property. If a criminal tries to file a fraudulent deed, you will know about it right away. Also, confirm that your old mortgage lien has been released from the property records. The Consumer Financial Protection Bureau says you can verify this by contacting your local Secretary of State or County Recorder of Deeds, and the FBI recommends these additional steps. Set up online search alerts for your property address. If you have vacant land or a second property, ask a neighbor to notify you if they see anything unusual. And if you ever suspect deed fraud, report it to the FBI's Internet Crime Complaint Center at IC3.gov within 72 hours, because the FBI says that is the window where they have the best chance of recovering stolen funds. The CFPB also recommends that every senior designate a trusted contact person at your bank or financial institution. This is someone who can be alerted if there is suspicious activity on your accounts. Step 3. Before you sign anything on your home, get counseling first. If someone approaches you about a reverse mortgage, a home equity loan, or asks you to sign any document related to your property, stop. Do not sign anything at the kitchen table. For reverse mortgages, federal law requires you to complete independent counseling with a HUD-approved housing counselor before you can take out a HECM loan. This is a protection designed for you. Use it. And know this. Federally insured reverse mortgages are non-recourse loans. That means you and your heirs will never owe more than the home is worth. Your heirs can pay off the loan by selling the home for at least 95% of its appraised value. But if you fall behind on property taxes or insurance while you have a reverse mortgage, you can still lose your home to foreclosure. So that takes us right back to step 1. And if you receive SSI or Medicaid, please do not sell your home or transfer it to a family member without speaking to a benefits counselor first. Your home is excluded from the SSI resource limit while you live in it. But the moment you sell it, that cash counts against you. And transferring it below market value can disqualify you from benefits for up to 3 years. Now listen to me carefully. The rules I just shared with you are real. They come directly from the Consumer Financial Protection Bureau, the IRS, the Social Security Administration, the FBI, and the United States Supreme Court. This is not opinion. This is not rumor. These are the laws and policies that affect your home right now. And here is what worries me. These rules change, tax deadlines shift, new scams emerge. Insurance companies pull out of entire states overnight. And if you do not hear about these changes in time, you could lose everything you worked for. That is why I do not want you to rely only on YouTube notifications. We all know the algorithm does not always show you what matters most. So I created something specifically for you. It is free. It is the Global Senior Alerts official WhatsApp channel. When you join, you will get real-time alerts about Social Security changes, pension rules, property tax deadlines, banking regulations, insurance policy updates, and travel rules that affect seniors. And right now, when you join through the link in the description below, you can download a free copy of the Senior Benefits Protection Guide. It has everything I covered today in a simple checklist you can print out and keep next to your important documents. Click that link right now. It takes 30 seconds, and it could be the thing that saves your home. If this video helped you understand something you did not know before, please hit the like button. It helps other seniors find this information. And share this video with someone you love, a parent, a neighbor, a friend from church, because the person who needs this most might not know to search for it. I am Jocelyn. I will see you in the next one. Take care of yourself and take care of your home.